right, welcome back to Nadlin Forum Podcast Daily. I'm Ruby, and with me as ever is Leah. How's it going, mate?
Good, Ruby. Excited for this one because everyone is talking about refinancing right now, really. Almost like this wave came out of nowhere, but actually not so surprising if you follow the numbers.
Yeah, it's wild. So mortgage rates finally dipped. Average 30-year fixed is at 6.37%, right? That's the lowest we've seen in more than a month, maybe even years depending on the lender. And boom, suddenly refi applications are, 81% higher than this time last year? That's not a little blip. That's people scrambling to grab their second chance.
Exactly. People sometimes think, oh, a drop from 6.42 to 6.37, big deal. But it is a big deal when you're talking hundreds of thousands of dollars, especially over 30 years. And what the data is showing, MBA stats, conventional loan refinances were up 6%. FHA, even better, up 12% just last week. But VA loans, a bit of a surprise drop, down 12%.
That VA exception surprised me. And look, talking about those shoulda, woulda, coulda moments, my parents back in Sydney missed out big time on the last refinancing wave, like totally tuned out when the rates dipped a couple percent. They thought, it's temporary. Then, of course, rates shot back up and now they're still stuck with higher payments. Even just 0.5% lower could have saved them serious cash every month. So I kind of get why people are jumping now, even if the change feels small.
Yeah. The psychology is interesting. After so many people locked into higher rates in 2023 and early 2024, now you have this pent-up demand. It's not like the boom years of 2021, but still, as soon as you get a little movement, a lot of those folks are running the numbers again. Not everyone makes the move, but if you're anywhere near that edge, a couple hundred in monthly savings starts to look pretty good. And honestly, that's a nice setup to talk about the other big trend, adjustable rate mortgages, which are suddenly back in the spotlight.
Oh, totally. So ARMs, adjustable rate mortgages, have sort of crept up while all the focus was on the fixed rates. We're seeing a 16% jump in applications for those. I mean, that's a pretty chunky week-to-week change. The thing is, ARM rates are 80 basis points lower than your typical 30-year fixed. That's a significant gap, especially with home prices still through the roof.
Right. And with ARMs now making up 11% of the market, that's remarkable. People used to turn to ARMs when the fixed rates got a bit scary, but now with home prices staying so high, it's more like, okay, how do I keep this monthly payment out of the danger zone until rates fall enough to refi again?
Yeah, and that's the key, isn't it? Most folks choosing ARMs now are playing the short game. Grab the lower rate for a few years, then hopefully rates keep moving down and they'll refi into something long term. Did you say you had a client story about this?
Yeah, just last month. Client in New York, young couple, wanted to buy but really struggling with the price point. Their agent and I ran the numbers and the ARM made their monthly doable. But they're really counting on, getting another shot at refinancing if rates continue to fall. It's not without risk, but with ARMs being so much cheaper right now, literally hundreds of dollars a month, for some buyers, it's the only way they can get in.
I mean, it goes back to this whole change in mindset compared to a few years ago. Now it's, how do I survive these prices and still leave the door open for a better deal? I'm not saying everyone should run out and get an ARM, but you can see why that option is suddenly more appealing, especially with the market not offering any favors on prices yet. Which connects to this bigger question. Why are buyers, even with all these new options, so hesitant to actually pull the trigger?
Yeah, that's the real tension right now. Even with more inventory, a little softening in some regions. Phoenix, Austin, Las Vegas are all good examples. Buyers are like, maybe if I just wait a bit longer.
right? And the mental math isn't just about the monthly payment. It's the insurance, the taxes, all those extra costs that have gone up too. So you might be looking at lower rates on paper, but in real life, it still feels tight for a lot of folks. There's this almost collective hope, like the next Fed decision is going to make everything magically affordable.
Exactly. And even though there wasn't some huge economic shock driving rates down, more just the bond market reacting to a steady stream of maybe softer inflation numbers and the Fed signaling they might be done hiking soon, it's enough to shift sentiment. But, like we've seen before, a lot rides on the data. The next CPI report could totally shift the mood, up or down, and then there's the Fed meeting after that. If they're dovish, rates could slide more, or if not, well, you get this tug of war all over again.
I mean, it all comes back to confidence, doesn't it? Remember when we talked in the last mortgage rates in a quiet market episode about seizing opportunities in the calm before the storm? Buyers and refinancers are still so tuned into these headlines, waiting for that one indicator or Fed comment that'll tip them into action. So 2026, I reckon consumer confidence is going to be the main ingredient for what comes next, whether you're buying or refinancing, or just hanging out and hoping for that mythical 5% rate to show up again.
Yeah, and as much as people say, it's not like 2021, in some ways it is. Everyone's still looking for their entry point, just with a little more hesitation and a lot more eye on their calculators. The market's moving, but the psychology is still a huge wild card.
All right, so that's our pulse check for today. Refi waves, arms on the rise, and the waiting game buyers are playing as we stare down more Fed drama and economic data. Lior, always a pleasure. Thanks for sharing your stories and calling it like it is.
Thank you, Ruby. And thanks to everyone listening. Remember to reach out if you have questions or if you want us to dive into any other mortgage or real estate topic in the next one.
We'll see you next time on NADLN Forum Podcast Daily. Catch you later, Leah.
Bye, Ruby. Take care, everyone.